Mic test, mic test. Hello. Hi. How's everyone's day been? Interesting. Well, I guess I can start the lesson early, given that obviously there's no one in chat because I'm just a no-name streamer. But that's fine, that's fine. Been a long day at work for me, and to those of you who are watching this back on YouTube, maybe you're new, maybe you came back from other lessons. If you have seen some of them and you like them, thank you for coming back. And those of you who are new, welcome. So, a brief summary of how this usually goes. I record, lessons for accounting, mainly explained in very simple terms using real life examples. And well, if you're watching the VOD and you have any other questions, do feel free to drop by any one of my streams and ask me. Or you can just leave a comment. I read them regularly, as much as I can. And yeah, I'll try to answer as many of your questions as possible. Why I'm really doing this? Honestly, it's just a hobby. I'm streaming to the void, but I like teaching, so I'm also recording this for any of those who stumble across this and want to learn something from it. So yeah, without further ado, let's give a quick recap of what the first and second lessons were. So lesson number 1 mainly focuses on what is accounting. ACC stands for accounting. And the second lesson is basics. Mainly, what is the main principle behind accounting, right? This is technically part 2 of basics. So let's cover lesson 1 in a few sentences. So what is accounting? Well, to me, accounting is documentation of a story of a company, a story of a person, in finance sense. So translating whatever they did usually for the year into something that people who have learned accounting would understand at a glance. And accounting is standardized across countries to ensure that even if you're from a different country looking to invest in a certain company of another country, maybe, if they're following the same accounting standards, you roughly know exactly what you're getting into, right? So that's what essentially accounting is. It's just a universal language for businesses to communicate with each other and to communicate with the public. I think that's a bit more than a few sentences, but that's fine. Alright, so lesson 2, it was in the same stream. I decided to break it into two lessons because I felt that it was too long. Lesson 2 talks about basics of accounting. In a sense, what kind of principles we follow. So accountancy, we're not really guided by hard and fast rules for a very simple reason. Real life is way too complex for a accounting Bible to cover, right? So what the accounting Bible does, which is International Financial Reporting Standards for most countries, and for our friends in the US, is the GAAP. I made a mistake last stream. I called it Generally Accepted Accounting Practice. The P stands for principles. Yeah, so that was my bad. Sorry if I messed it up. But yeah, so both of these lay out principles that guide our judgment. They guide what we do in the field itself. So yeah, that is honestly what we've covered. Kind of gone through 40 minutes worth of stuff in 5 minutes. But essentially, this is what class is like, right? I'm just going to talk about a certain, topic that looks difficult at a glance and is difficult if you go into all the details, and try to dumb it down for those who are either just starting out trying to learn accounting or without any accounting knowledge at all. So if you find this sort of content helpful, do come back. There'll be more. Or if you come back way later, or if you're joining us way later, you'll see a whole list of lessons, hopefully. I'm just starting out, not sure how long I can sustain this for. It is a bit tiring, working a 9 to 6 while streaming at night. So please bear with me if I do sound a bit tired. Alright, so now that interlude is over, let's jump into lesson 3. Debit credit. So, what happened to my spelling? Alright, so this can be either the most complicated thing you've seen or the easiest thing you've seen. It really depends on how you were taught. Many of you might know acronyms like DIT, COIL, and maybe another DIT. I can't remember what the other one was. This was the one that was taught to me while I was studying. Basically, debit. Actually, you could just Google this. Expense, asset, and drawings. Right, and COIL would just be credit. Owner's equity. Kind of forgot what I was. It really shows I don't use this at all. Yeah. Oh, this is awkward. I forgot what I was. Oh yeah, right, income. Right, so this is what was taught to me last time, and essentially what I and I assume many of my peers, who are just starting accounting, did just memorize this thing, write it down in the exam at the start, and really, yeah, just follow it, right? Well, my brain kind of doesn't work like that. It doesn't like to memorize things. I think I said it in the first stream. My memory is quite terrible. I'm not gonna erase this because for those of you who can memorize, you can just do this. The downside of this method is, well, it doesn't cover everything actually. For one, there's the most glaring weakness of this method is you need to know what an asset, a liability, and equity is. And sometimes it's difficult to judge, right? And also, after determining it, you still have to go through DIT COIL. Right, so what I did was actually just skip the acronym. Let me explain what I mean by that, right? The concept is the same. They're all built on this accounting equation, which we went through last week. But just to recap, for those, just a very short recap. So A stands for asset, E stands for equity, and L stands for liability, right? And in the previous stream, I just said equity is just not liability. Not asset, not liability, equity. Right. So let's take a look at a few examples, right? Say you okay, maybe, yeah, okay, there we go. Clarify a little bit. Hopefully this helps. So let's take an example, just any common account like cash, you know, things that you see in almost every single company. Cash, well, I'm just gonna use what I taught in the second lesson, if I'm not wrong. Definition of an asset. So number one, it has a history. You earned it in the past. Oh, sorry, not earned it. You received it in the past. There's a difference between earning and receiving, which is important. So I'm gonna be technically accurate here and just say you've received it from some action, from somewhere or someone, right? Number two is you're gonna use that cash. No one really likes having cash sitting around doing nothing. So you usually, like, if you're individual, you invest it. If you're a company, you also invest it. The investment subject is up to the person's discretion. So yeah, usually you hope to get future you hope for future benefits, right? And it has to be probable. So you did some analysis. You think that, oh yeah, I am going to earn at least, you know, what I put in. I hopefully won't lose money. So that is basically, yeah, asset, right? Pardon me if this is not very accurate. I just want this to be as simple as possible. If I get some of the definitions wrong, feel free to scream at me in the comments. I'll read them and see what I can do to correct my own mistakes. Alright, so let's move on. Maybe another account, like you say, a loan, right? Very straightforward. You receive cash from the loan, right? So basically you extended, or someone extended it to you, right? There's history, you know, maybe a loan for cash. That's it. Yeah, so it ties in with the first account. Okay, so then, well, you are very likely gonna have to pay it back. So future cost, and this is also probable for it to be classified as a liability. Okay, then what about equity? Well, that's tricky. So if you can't classify into asset or liability, then it's equity, right? So you gotta be very certain there is neither of those two. That's the hard part. So let's go into one example real quick. Let's see, revenue, right? You look at this account, and usually when revenue is earned, it is, you know, it's recorded as like you debit revenue. We'll go through this later, but for now you you credit revenue and you debit something, cash if you received cash, or accounts receivable if they say they'll pay you later, right? So kind of there is a history that you made a sale, right? But the thing is, when it comes to the second criteria, it fails because this is a historical event. True, which is historical event is a criteria 1, right? But you can't say I will use this revenue to earn more revenue. You can use cash to earn more revenue, but you can't really. The grammar doesn't make sense here, right? It's English. You use the cash that you earned to generate more revenue. You can't use your revenue to generate more revenue. It sounds a bit off, right? So number 2 is like sketchy at best. So usually when you're not sure, you don't classify as that, right? You don't classify as an asset, and it's not a liability. You don't foresee yourself paying out your revenue. Hopefully not. You know, that means something is wrong. You know, you sold a faulty product, then you have to decrease your revenue. So, and then again, because revenue is just a transaction, it's not a physical, you know, things that you can quantify in a sense. Like, you know, a bank account is not physical, but you know that it exists. You can't really say revenue exists. Like, you can't prove it. Something along this sense is complicated. So let's just say that revenue is neither, right? And it is neither. So this is why you classify as equity. The moment you say it's not an asset, it's not a liability, therefore it's equity. And let's go through another one. Maybe expense. We can go through debt coil with this. Expense, you've already incurred it. Like, you'll say your monthly phone bill. This one is more obvious, right? Sure, number 1 is fulfilled because you know, what's that called? Yeah, there's a history to it, right? You've used your phone. Therefore, yeah, there's a history. Yeah, I did incur this. Number 2, kind of off as well. You see, because expense is used to record something that, you know, record usage, right? And future outflow, usage is historical, right? And it doesn't say anything about, you know, future outflow, like future cost. You can say I owe this person, and that will be a payable. I say I you know, I owe this man $20 because he sponsored me lunch. I have to pay him back. Not really sponsored, sorry. He paid for my lunch, therefore I'll pay him back. That's a payable. Yes. To him, it's a receivable. Right? Expense is usually something different. Like, when you talk about expense, it's usually with the expectation that you won't get anything back from it. Right? So it's neither a future cost or benefit that you're hoping to reap from it. And usually that's why people say it's an expense, right? Say that guy can't pay you back anymore. You lent him like $100, he can't pay you back anymore. You can't say that it's a receivable because you're not gonna be able to receive it. What do? You treat it as an expense. Oh no, I'm never gonna get $100 from him ever again because he's maybe declared bankrupt or something. But yeah, number 2 is either, I mean, it's sketchy at best again. So equity, right? Then from here, the pattern seems a little more clear. Things that you can't say for sure is asset or liability, usually it's an equity. If you know your if you know your stuff a little bit. So, and yeah, now we can actually go into debit credit, right? After we know for sure what is what. Let's go through this again. Asset equals to let's liability plus not liability. I'm just gonna call it that because it's easier to remember. It's liability and not liability, right? Or asset. You can add NLA or NL, whatever. It's just that, right? So asset. Or how about this? Let's use credit card as an example. I think it's a great example for illustrating why credit card. It has credit in the name. Okay. What is a credit card? You buy now, pay later. Right? Buying now, you bought something on credit. So you that it was an event that occurred, right? You already bought something. You'll pay next month. Probable future outflow. This is definitely a liability. Right? Credit, a liability. So when your liability increase, you credit it. So let's bring this down more. Liability. Credit to increase. Debit when you decrease. Debit is just the opposite of credit. This is why people always say they go hand in hand. I'll say it's Newton's first law. Things cannot be created or destroyed. That is just that. Where you increase in something, something else will decrease. So, say for example, you've increased in liability, right? If your not liability remain the same, then that means that your asset has decreased. Simple math equation. Wait, hold on. Okay, my math I failed math. Alright. Okay, this is embarrassing. Alright, so sorry. That means your asset increased in some way or the other. Right? Imagine you took a loan, right? You received cash. Because that's what you took a loan for, you need the cash for something. So your liability in the form of a loan has increased, and your cash on hand has increased. Right? The physical amount of cash on you. So that's what the equation does. Right? So if you could imagine everything along this equal sign, so maybe I shouldn't use equal sign on this bottom part, but everything along this line, the opposite, right? When something increases, when your asset increase, debit. When your asset decrease, credit, right? So what about not liability? Well, it's on the same side as liability, so the signs should be the same. Okay. So let's talk about not liability, right? So usually when you look at not liability, is equals to your capital. Capital is basically the amount that whoever who created the company, the owners, have put in. So it could be in the form of shares. It could also be in the form of, if you're a sole proprietor, you put in your own funds. Designate it as business use. That's important. You can't mix your personal funds with your company funds. And if you do... No comment, please don't do it. Okay. Yeah, so capital can be in the form of shares, like companies sell shares. They sell part of the ownership to someone in hopes of getting money from it. It's to raise funds, right? So that's your capital, right? Then you add something called retained earnings. It's a relatively self-explanatory phrase. Retained earnings just means that in the past, what you have earned, you have kept it retained, right? Earnings. So yeah, it's just past earnings that you have kept, and it just belongs to the company now. The company has yet to use it. Yeah, And then last but not least, you have, if you are a sole proprietor, drawings. Or partnership. I think partnerships drawings as well. Drawings means you take out some of the company's funds to use it for your own. Essentially, the company gave you a loan, but because you're the owner, you are special. So they say this is drawings. Like the owner is reaping some of the benefits that they had put in the past. Therefore, yeah, you can see it as either. But technically, drawings is a equity account, not a liability. Right. So let's see. Right. Retained earnings can be broken down further. I probably won't go through that just yet. So there'll be part 2 to this, debit credit. We are coming up to the half an hour mark. So I will actually stop soon. Right. Capital. If you see, non-liability, right? Not liability. So this applies. Okay, the equal sign is a bit misleading here. Yeah, so anything under this. Okay, this is interesting. The minus sign means that the polarity is flipped again. Right? So, to be honest, you either use the acronym or you just use this. I prefer to use this, just a math equation. Very simple one. A equals to liability plus not liability or asset. So hopefully this clarifies a bit more. This is a tough one. So I will go through this in detail in the next part. But for now, note that these two, let's call them A and B, you will find them under retained earnings. Okay, so this is a teaser for next session, which I think will be next Wednesday. I hope to shift it to Wednesday because Friday everyone got off work. We shouldn't be studying that hard. Really reward ourselves for surviving the week. I'll do the same by gaming on stream instead of teaching. Right, so yeah, for now, this is it for the lessons part. So next, let's move on to some practice. So application. Accounting is a very practical subject. The whole purpose of it is for, is for use, right? Like people to use it in a corporate setting. And really is to benefit not just the company, but also the general public. If you know how to read it, you actually have an edge over others. So learning accounting isn't terrible. You don't need to do it for work, So yeah, any knowledge to me at least is pretty useful. What can I say? I'm a nerd. I like learning knowledge. Yes. All right. So let's move on to some application questions, right? So applying what we've learned, let's look at a very tricky account, something called prepayment. Now we'll cover this more in detail in the future, but there are usually two classifications for it. One is prepaid expenses. The other one would be prepayments received. Okay, these two mean entirely different things, and the treatment for them are opposite. Prepaid expenses, what does this mean? Say you are on a monthly plan, for mobile data, for those of you who have, or a, broadband at home, or anything with a subscription sometimes you can pay additional money, right? That means well, the amount that you gave them is more than what they'll deduct for at least this month, right? You can pay like years in advance even, but it's not I'll say recommended for a few reasons, but I won't dive into this. This is for simple. So you just pay extra so what does this mean? Is just more than 1 month's worth, right? Or if you're on a prepaid plan, meaning you pay first and you use it, you are able to use the service. So that is one more. And prepaid plan is, well, is in the name, prepaid, right? So what is this actually? Let's look at the criteria again, shall we? First one, history. You paid to use a service, usually. Right, it can be anything actually. Like not only plans, maybe your telephone bill, you know, is also an expense. We'll get through that in the next lesson of what exactly an expense is, but generally you can kind of have a sense of it, right? You paid to use a service, history. Number 2, you will be able to use the service in the future. Future benefits, right? It still sounds a bit counterintuitive, and I understand that. I went through that phase too. So, well, let's go through maybe what exactly this does, right? Say you paid for January's gym membership, right? Okay. And you can, and this allows you to use the gym in January. Oh dear, what happened to my spelling? Okay. Right. If you're allowed to use this in January and you paid it for it on 1st January, what does this mean? It means that on 1st January, you can't use it yet. Or at least like until they, you know, register you. Sorry, I lost my train of thought there. Register you and stuff like that. Sure. Sometimes you can classify this as just an expense. Sometimes. Usually the technically accurate way to do it is because you pay at the start of the month, you still have a full month's worth of use, right? So you will actually recognize it slowly as an expense. So it becomes an expense over time. That is the accurate way of using it, like the most accurate way. Usually when companies pay in like months in advance, they don't do day to day, right? They just do one like month to month, and we accept that because it is not practical to do day to day adjustment. It's just a pain, and frankly you don't gain too much from it. Yeah. So okay, so this is one example. Maybe it's not clear enough. So what if you paid for... Oh, what happened to my... Okay, what if you paid for February's usage on 1st of Jan? February isn't here yet, right? And it will only allow you to use it in February. So this is very clearly a future benefit, right? You're giving the money to them, saying to them, hey, I may forget to pay next time, so I need you to hold on to this money for me. And when the time comes and I decided to use this, You can just take from the funds. So that is prepaid expenses. It is, you know that you're gonna have you're gonna pay them the expense in the future, so you just give it to them right now and save you some trouble, right? So yeah, that is a prepaid expense. So what is it then? If it checks both marks, and the second is a future benefit, it's an asset, right? So let's look at the second one, which is, honestly, you can see it just the opposite of prepaid expense, but from the perspective of the company you're paying. So say person A owns a gym, right? The gym reports to him. And person B wants to use the gym. So what does he do? He pays the gym first, you know, but the gym will transfer the money to person A, assuming this is a sole proprietorship. He pays the gym $10, while the per month charge is $5. So this essentially is B saying, hey, I want to use this gym for 2 months, right? 5 times 2 equals to 10, right? So say, hey, I want to use this gym for 2 months. Let me just pay you $10 and you let me in for 2 months, right? It's a win-win for both. Why? Because B would save the hassle of having to pay 2 times over that period where he knows it's gonna be going. And A receives $10 instead of $5. And $10 now, cash is king. $10 now is worth more than $10 in the future. $5 now, and you know, okay, let's draw this out. Now is better than $5 now plus $5 in the future. Right, so A wins and B will get more convenience, right? B also wins. So this, I'm gonna remove this. It's just to illustrate what I'm saying. So this is actually why this does happen a lot in real world, and why accounting for this is tricky and essential actually. So imagine you're prepaid expense is from person B's perspective, right? Because he paid A in advance. What about this? Receive extra, more than 1 month's worth. And this is a bit more difficult to visualize. So let me try and guide you through this, alright? I'm gonna run like 5 minutes over. Unfortunately. Well, okay, if we don't count the 5 minutes for the summary, I hope. Yeah, so let's just finish this. Where was I? Oh no. Okay. Criteria 1. Let's just go back to basics. Criteria 1, there's a history. History is just this. This is the history. Person B paid A $10 instead of the $5 a month. Say, hey, I want to use this for 2 months. Okay. So we all know the story, hopefully. What about number 2? Right? Are there any future outflow of benefits? Let's guide you through one scenario that might happen. This is a prepayment, not a deposit. The difference being deposit usually is not refundable. They'll just say this deposit is not refundable. Prepayments usually are refundable, usually. So unless stated otherwise. Yes. If it's stated otherwise, the same principle actually still applies. Why? Future outflow of something. Let's just keep it even simpler, of like something, literally anything. What does this mean? Whenever someone uses something in the gym, it breaks just a little bit more. Literally anything, can be anything under the sun. The PC cafe, you know, your computer has a limited lifespan. When a PC cafe, you know, serves a customer, their PC breaks just a little more, right? So that breaking of a little more, eventually it'll lead to a PC breakdown. You have to replace it, right? So that small breakage has a cost to it, and we'll go through that in the future, what exactly it is. Spoilers is depreciation. But yeah, we'll go through that in the future. But just know that whenever you use an asset to gain something, can be revenue, can be something else, you lose a little bit. There's always a trade-off. There's nothing that you can earn for free, right? So that ties into one more concept. I'll probably go through it in either lesson 5 or 6. It's accruals concept. Yeah, I'll leave it to next time. But basically, there is a future outflow of something, right? Person B will use the gym for 2 months. He's gonna use the equipment there, so the equipment is just gonna break a little bit. Even if he's the most careful person on earth, anything mechanical will have a lifespan, right? So yeah, you could say there's a future outflow of something. You know, like you could just say it's a future replacement of equipment, right? This is scenario 1 where B goes to the gym. What about another scenario? B withdraw. He say, I don't want to come to this gym no more. Give me back my money. It's not a deposit. It is refundable, right? So he could argue that, and if the gym said, oh, this is refundable, what happened? You lose some cash. Like, you lose $5. But $5 is still money. So both scenarios will lead to a future outflow of something, right? So what does this mean? It's a liability. And this is for person A, who owns the gym, right? Okay, and oh, I actually did keep my promise of 5 extra minutes this time. All right. Yeah, so hopefully you've enjoyed watching this back. So far I still have I think I still have 0 viewers. At least no one's in the chat. Yep, okay. That's fine. That's actually more than fine. I get more nervous with more people anyways. So this is, well, comfortable. I think I can continue doing this more in the future. Wednesday night streams. Should be the same time, 9 p.m. UTC plus 8. That's a time zone. And well, yes, kind of. It'll be tiring for me, but I feel that as long as at least one person learns something from this, from watching this, it's more than enough for me. So if you do watch this and you enjoy it, first of all, thank you for actually clicking on this video. I know it probably won't have the most lavish thumbnail because frankly I do not have time to do all this. And frankly I don't want to spend more effort pushing myself. This is actually considered pushing myself for me. And yeah, if you choose to come back, really that's the best thing ever. I couldn't ask for anything more. Just come back. If you have questions, drop them either in the YouTube comments, or if you want live guidance, honestly the best move would just be watch the stream, ask a question. And yeah, I think I would actually end off the stream here. It's a short 40 minutes. And Friday would just be, thank goodness it's Friday. Yeah. I won't be teaching, because I feel like not everyone will share the same opinion that learning is fun. And so let's do something that is actually fun for most other people. But if you do want me to teach on Friday as well, I really don't mind. It's just that, not sure if you're up to learning on a Friday night where you just got off work and you're tired, or you just ended a week of school and you're tired. But other than that, really, thank you for dropping by once again. It's honestly the best reward I could ever get. And yeah, this is the mid of the week. Survive for 2 more days. Let's go. Yeah.